Welcome to Bears in Exile. Today is Tuesday, December 6th, and this is the market overview, looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, and SLV. Well, another isn't every day an interesting day? Just about, it seems like. We've been talking about needing to break a previous high so that we'd have a tell that the Bears have lost it and they are not going to do their bearish counterattack. Well, once again, no bearish counterattack and no break of the recent high. I mean, now we're right to it. We're right to it. It's going to be the second day in a row that we've gone intraday above it, but we have not closed, above it intraday, but back off by the close and closing below it. Now we're just completely out of room. So something's going to have to give, and it's just amazing to me. I mean, it's almost like it's made on purpose to be that way, just to see who blinks first, and certainly that's occurring at this very moment. So fascinating, absolutely fascinating. Into today with an inverse hammer. Got above the major price consensus level yesterday, and of course again today we're still below the upper price consensus level, but wow, how long are we going to have these tails on top before we just turn around and have a full green body or a reversal? You can see that we have excessive separation in the short-term moving averages. It is not pretty. We are above the 200-day moving average, of course. We are having the middle Bollinger Band below the short-term moving averages, of course. And we have a bullish bar forming. You know, this does not look bad on the Dow, just looking at the candles and the pattern. Certainly it could use a bubble corrective move to fix this excessive separation, but nonetheless, it doesn't look bad. Now, once we get into the indicators, things don't look so great. CCI overbought, stochastics overbought and flipping over. 14-day RSI moving average still pointing down. Not at a great descent or anything, but it's still pointing down. Above the 50 in the RSI, which is positive and not bad at all. Still ticking up in the histogram and the MACD. That doesn't look so bad. Going to the 60-minute time frame, we can see overbought in the CCI, overbought in the slow stochastic, well, almost. Rolling over in the stochastic, going down on the 14-day RSI moving average, rolling over in the RSI, going down on the MACD, and the histogram just kind of fluttering about. This is not pretty. You can also see that we are above a bullish bar in the 60-minute time frame, but no real indication of a test of it or a break of it or anything else. We still have negative divergence in the CCI, in the stochastics, in the RSI, in the histogram, and MACD is not following the movement of price either. So there is trouble. Matter of fact, all of the intraday time frames, in my opinion, don't look very good. Here's the 30-minute. That's not pretty. Here's the 180. And while not as bad as the 60-minute, look at that 14-day RSI moving average, and it's getting a tiny bit of a possible curl on it. And we have the slow stochastic very high, CCI very high, RSI trying to get out of high, histogram sloping down. It is not pretty in any of the intraday time periods. So something really to think about. Even if we get that break of a previous high over here, really the best thing that the bulls have going for them is all of the bears that would need to cover. Maybe that would be enough, but still, it looks like trouble to me. SPX, more of the same, and actually not as good as the Dow. It kissed the level of the previous high and backed away from it, ended with a spinning top. We weren't able to get above or close above the 200-day moving average, and the secondaries are all the same. with the exception of the MACD and the MACD histogram, this does not look positive. So bull's best chance is a break of the previous high, close above it, and spark a short covering rally. That's all there is to it. And the question is, who's going to blink first, the bulls or the bears? Certainly the bears haven't done jack in the last week and a half, but boy, who can blame them? This has been a very powerful move up. The VIX ending green, a miniaturized hammer. Not much of anything really to look at, but still, that is what it is. We have a slight uptick. It gives us a target right underneath, actually right at $30. But we've noticed and have mentioned 14-day RSI moving average still pointing down throughout this turn of the stochastics and pretty much everything else. So this being green, the SPX being green, the Dow being green, it doesn't jive. It's green the day before, green the day before. It does not jive with the market being green. So something is not right here. TNA, spinning top, actually more like a doji star since the body is so darn small. But regardless, we are busting through the bearish bar, which was not very strong. Actually, we have to blow it up really huge to see that there's any kind of a bar. So really, I shouldn't even really say that. Nonetheless, doji star, CCI very high, ticking down. Stochastics both in overbought territory. 14-day RSI moving average ticking down. Downtick on the RSI, and uptick on the histogram and the MACD. Yeah, it certainly does have some problems. 60-minute just to see what we have. No evidence of a retest of the bar as of yet. And 14-day RSI moving average ticking down along with the CCI, and the stochastics kind of indecision there. Uptick on the RSI, slight uptick on the histogram, downtick on the MACD. Not as clear or as clean as the Dow or the SPX. So actually that's a little bit of a nice thing for the overall market, since the Russell does lead along with the VIX typically, although we can get into these awful little sideways stretches which we absolutely hate, and hopefully we are not going into that at this moment. UUP, is it going to get stronger? Is it going to get weaker? We don't have a clean candle today to work with, but we also do not have the short-term moving averages pointing down or up either. They're pointing sideways. You can also notice that the middle Bollinger Band line is getting above the short-term moving averages. 14-day RSI moving average ticking up. Stochastics trying to figure out what to do with themselves. CCI having no direction whatsoever, along with the histogram and the MACD not having much of direction of any type, and a downtick on the RSI. So we've not had really good definitive news. It's kind of surprising because we should have had something really good out of Euroland today, and from what I can tell, it just wasn't the case. FXE, also not a clean candle to work with. It's not, the tail is not long enough for it to be an inverse hammer. Body is too big. Short-term moving average is trying to get below. The middle Bollinger Band is trying to get below the short-term moving averages. Downtick on the CCI, downtick on the 14-day RSI moving average. Stochastics trying to figure out what to do with themselves. Uptick on the RSI, uptick on the histogram, and slight uptick on the MACD. No appreciable pattern in the chart. We are below the major price consensus level for the month, and it almost looks like we are just doing a little Humpty Hump, and that it would be going down for another hump, but I guess we're gonna find out the hard way. GLD, had a positive move today. Nice green candle, almost a fat body spinning top, but we've been saying that we have been concerned about going into another double flatline. Today did not help that one bit. Stochastics trying to loop over completely. 14-day RSI moving average ticking down, slight downtick in the CCI, uptick on the RSI, and a nothing on the histogram and the MACD. You know, this is not attractive. This is not attractive. SLV, more of the same. Yes, we do have a bearish bar, small bearish bar in effect, but not attractive. Not attractive. We don't want to get all caught up in the long-term moving averages. The stochastics are confused. Downtick on the 14-day RSI moving average, up on the CCI, up on the RSI, and also flattening out on the MACD and the histogram. We don't want it to crap out right here and just sit and wear away at the bar until we have a double flat line. It's ugly. It's messy. It's not good. It has no direction. So so there it is. We need more information. We need more clarification, and we need to see if the bears do in fact counterattack. Their odds are diminishing day by day, but we're going to have to see. We're out of room. So at least we have that. We should have some sort of a break right away. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.